What's up, YouTube? It's Joe Catchpolia sitting on the couch, making some money, investing in fractional real estate online, as usual. Today, I was pleasantly surprised to find a new pad split listed on Mogul. It's a co-living property. They have it listed as a triplex. When I looked on Realtor, it mentioned that it's a fourplex. My guess is it probably is just a triplex, and there's like the basement unit maybe isn't a real unit or something like that, but it's set up as 10 bedrooms, 6 bathrooms, a co-living situation. If you don't know what that is, I did a separate video on what co-living is a couple of weeks ago. I think you could probably search the channel just for that term, co-living or pad split, and you'd see that. But they're just rent by the room for basically a week at a time. I think sometimes they have a minimum stay up front of 30 days to avoid some short-term rental rules. But in general, midterm, people aren't spending just a couple of days there, but they're also often, not spending years in the place either. Um, if you've been following along on my investment journey on Mogul, you'll know that I bought a couple of these from them. I've got the one in Arizona, and then I think two in Decatur, Georgia, which is pretty close to here. So a couple of things. One, if you look at the Mogul playlist on my channel, you'll see all of the properties like this that I've already looked at. I think it'll be pretty clear which ones are Atlanta pad splits. And so I'm not going to dig in again as to why I like this model or why I like Atlanta as a market. I mean, really short, it's, the market, it's still a rapidly growing population. The model works really well for people that need just affordable housing, right? You can't afford an apartment, but maybe a room that's furnished and your all utilities included. That just works for some people. But typically, this tends to be some of the lower income workforce housing that in most markets. Um, Although there are some co-living operators that sort of cater to higher end. And actually, when I was looking at this, it looks like they have some um, pretty good monthly or pretty good weekly rates when I looked on the pad split site itself at this particular property's wait list. But so they're projecting, so the purchase price is 750,000. I'm going to jump into that real quick. Um, that they're projecting $111,000 in yearly rental revenue. This is again where they're picking they're projecting numbers that are below what the actual in-place income is, which I really appreciate that they're continuing to be conservative with their numbers like that. Let's see, I pulled up the contract. There wasn't a whole lot too interesting in it, but just like I mentioned last time, they have where they're getting prorated rent, and they're not prorated based on what they collected this month. It's based on what the average has been for the last 12 months, which I just think is an interesting way to do this, especially on a model where you have so much movement in your occupancy, right? If you have 10 rooms, some months you might, or some weeks you might have seven full, the others you might have all 10. So where you have some fluctuation, I think it's smart that they're doing that. There really wasn't anything else in the contract that I think was particularly interesting. They do have an appraisal contingency, but no financing contingency. I think that's basically in line with what they've been doing. They already have an analysis tab up. They're saying their year one cash on cash yield is going to be 10.1%, with a annual IRR for over the hold period for 15. To get to that, they're doing again where they're assuming a refinance. Um, if we take out the refinance, though, it's still, it just drops you to 14.2. One of the things I think it's kind of, I know I've mentioned this before, but I think it's kind of interesting that they choose to model the refinance as a way to sort of boost that IRR instead of just being a little bit more aggressive on their in-place income, and instead of being so conservative there. But I actually like that they do it. I think it's a reasonable assumption that they'll be able to refinance sometime during the hold period, but it isn't. I just don't think it's guaranteed. So I'd rather, if they feel like they need to show a little bit higher income, I'm not really sure why they don't just go with, well, let's actually underwrite it based on the current income being the projected income. But I guess overall, because I think that this is a really healthy yield either way. I don't mind. I don't mind that this is how they do it. And so I'm going to just run through a couple of things real quick, and then just let you know, what I think my biggest issue with this one is. Okay, so FEMA flood map, it looked perfectly fine to me. You know, it looks like you had a couple of flood zones nearby, but not right there. Um, just remember, just you want to do your own due diligence on this property. I like to go through all the different things that I've looked at, but it doesn't mean just because I decide to buy it that you should, or vice versa. If I decide not to, doesn't mean that it's necessarily a bad investment. So you want to really dig into that on your own. Um, just like we do with all the sites. Oh, before I forget, please like and subscribe. And in the description to this video, there's a link to a Discord where several of us investors that are buying fractional real estate online just get in there and talk about all different sorts of topics, whether it's Mogul, Lofty, Ground Floor, a bunch of different platforms. It's not a sales funnel. Nobody's trying to sell you anything in that platform. Every once in a while, I will post one of my YouTube videos in there, but that's about the extent of it. I delete all the other spam that shows up in there. Um, and then also in the description to this video, there's links to all the places that I'm currently investing. Please do your own due diligence on those sites as well, because you know all of these are relatively new platforms, and there's definitely risk involved in all of them. So now we got that out of the way. Sort of interesting when when you look at the map and when you oh well, because it's a pad split. One of the first things I'm looking for is where's the closest bus stop. A lot of people that are renting by the room want to ride the bus, and there is one very close. The other thing that I like to look at about the physical characteristics of the property is that there's plenty of parking, and it looks like there is. One of the things that worried me a little bit is, that it seems like this is a shared driveway, but I'm not positive. This could all be just for them, but just because of how close it is to this other property, I'm just not positive what's going on here. I think it is that that they're sharing that, but it is, a lot of parking. There's also street parking, and like I said, it's real close to a bus stop. So it seems like this isn't an issue, but it's something I just wanted to mention because I do always look for it with both short-term rentals and for these co-living style properties. I mean, obviously, well, maybe it's not obvious, but it doesn't look like you could park 10 cars here. But I don't think that everybody that's renting a room is actually, owns a car. I think a lot of them are probably going to be bus riders or using Uber or something like that. Um, if you look at where it sits in Atlanta as a whole, it's south of their downtown. I don't really know the Atlanta market too terribly well. I'm always digging into these, individually. Like I've mentioned several times, it's a market that I like a lot based on its, macro um, characteristics. But I hadn't even looked at a deal there probably in over 10 years, maybe even over 15 years, until I started buying fractional real estate. And so that's gotten me back in this area, but I'm certainly not an expert as far as neighborhoods and whatnot. But so that's why I'm always looking up, um, trying to get more and more comfortable with it. And it's also a big reason why I'm not putting a ton of money in any one property on this site yet, or on any of the fractional sites yet. But so okay, we'll get rid of that. As far as the valuation, the 750. If we look on Redfin, they provide a range 736 to 876. It looks like we're well within that range. Maybe it's a little bit low there. That one I thought was not problematic. Um, Zillow's the only one that had an estimate below the purchase price. 732. It's not that far off, and so I really wasn't too worried about that. Um, because the all the other platforms have a much healthier range. 767 and 943. I think they're paying, and then oh yeah, Redfin or Realtor just has this crazy high number for it, right? So I think they're paying a decent price for it. Maybe they're paying market rate, but it seems like maybe they're getting a deal on this one. Oh yeah, this is so let me jump back to that. I'm going to jump over that. Yeah, so that's one of the things that I've run into a few times is where I'm a little bit concerned about their what price they're paying, but it seems to me that on this one they're actually getting a pretty good deal because even if that 736 were a real number, Now, that doesn't take into account that it's an operating business with furniture already in place and whatnot. So I'd very much I was actually pretty pumped about this one until I got to this spot crime map. This worried me a lot. I know Atlanta, we've seen a lot more crime in some of the neighborhoods than in a lot of other markets that I'm invested in. Um, but these gunshot, this is about, if you've not seen me use spot crime before, one of the things you have to look at is the dates that it spreads, because sometimes it will go back a really long time to come up with this many crimes. Here it did. I mean, this is a whole month. It's a whole month of reported crimes. But it is just a lot of violent crime. When I clicked on these, in some places, when you click um, on a gunshot, it'll just say, "Oh, somebody reported loud sounds that might be shooting." Uh, but when I open these up, two persons suffering from gunshot wounds, violent crime, investigating shots fired, suspect detained, firearm recovered, a person being shot at home. So these were all actual gunshots when I clicked on them, and so um, this is it's a much rougher area than I would have expected when I was looking at the pictures of it. When you oh, and I meant to show you that too. Um, Now let me grab this address again and do uh, so when you're looking at this, it really doesn't. I was surprised to see that crime map. Um, but when I did this little walk down the street that I always do on here, um, there weren't a whole lot of signs that it was a neighborhood that I'd be too worried about. Wasn't. I didn't see a whole bunch of cars just sitting on the side of the road that were like clearly broken down cars. You can see there's some construction going on in this neighborhood. There was this was one of the only things that I saw, right? We had some graffiti right here. But as soon as we're just really close to where some of those shootings happened. And when we get down this far, you do see some bars on windows. This is not always a terrible sign. I've lived in places where there are bars on windows, and at one point in time, people thought they needed them there, and the neighborhood's changed quite a bit. So I did this before I looked at the crime map, and I wasn't really worried about it. Like this looked like, the home seems in relatively good repair. Again, you see some bars on windows. When you go down the other way, let's see. Yeah, we're back in front of it. When you go down the other way again, I mean, like there weren't a whole bunch of red flags as far as like, I really didn't see graffiti. A lot of the homes seem like they're in relatively good shape. Um, so yeah, that was a big surprise to me to see that we just had so many gunshots, that were reported and that were actual, crimes this close. Now, the real question is that enough to not buy this property, right? Like, we're talking a few blocks away, across a major road. So let's see but what I'm going to actually look at what it looks like over there. Um, it looks like we were getting maybe over here. Let's go back to that again. Yeah, True Street and Atlanta Ave. Atlanta, I think that's the intersection I dropped this down on. But when I looked here, this just doesn't look that different from the neighborhood that we're in. So I was really surprised, and I did this. I mean, I guess you see some deferred maintenance here, but I mean that's this is just it didn't. It was very surprising. Usually a lot of times when I spend some time on this street view, I have a good sense of what the crime map's going to look like, or at least, oftentimes, especially like when you see graffiti, when you see broken windows, when you see stuff like that. I hadn't actually looked at this. This doesn't even look like that. I don't know. So that was surprising to me. Um, the fact that it's so much violent crime was, well, one thing, it did pick from a pretty wide area, but I mean, these ones are very close, right? And this isn't even that far away. Um, and these assaults are really close as well. So I don't know. That worries me quite a bit. And I was trying to decide, is this enough to keep me from buying this property? It's been operating for at least 12 months as a pad split. It's making money. The property appears to be in good shape from what I can see. We didn't see an inspection report and probably won't, but I have a good sense of how, what repairs they're going to ask for and what ones they don't at this point. If you've watched some of my other videos, I give these guys, I just trust what they're doing a lot more than a lot of the other platforms, because so far they've consistently put out properties that perform well, and that I think they're doing a good job. They have a good track record of picking properties, so I do sort of lean into trusting them a little bit more um, than I do some of the other platforms when they're putting properties on. And so I was trying to decide. I was really kind of on the fence about it. And one of the things that I want to remind you is that, they are putting out properties, a couple every single month, at least. I mean, I think they're actually on track to do significantly more than that this year. Let's see what they've done. I mean, just since I started investing on here, this is the first one I bought a piece of. This, I think, was the only one that was available. I think they had one other one that I didn't like at the time that this came out. But so this came out. So one, I bought some of this one. I bought some of this one. So those four. This one I passed on. This one I passed on. So it's 4, 7, and three more. So 10 and three more, 13. Just since I don't know when I bought into this. I think I bought into this in December. So they are putting out properties pretty quickly. They're putting